Good morning and welcome to today's webcast, A Generous State, Claiming Arizona's R&D Tax Credit. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement, or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Thank you everyone for joining us today. I'm happy to introduce today's presenters, Tom Sanger and Peter Henderson. Tom leads the Moss Adams R&D Tax Credit Services practice. He has performed R&D studies in many different industries, including aerospace, manufacturing, and technology, and has extensive experience successfully defending his clients during IRS and state examinations. Peter specializes in federal, California, and Arizona R&D incentives. He has degrees in both engineering and accounting and serves industries ranging from software development to aerospace and automotive manufacturing. And with that, Tom, I'll turn it over to you to get us started.
Thanks, Emily. This is Tom Sanger. Today we are going to be covering 4 topics, and we left some room for some Q&A. And so please do get your questions out there. We'd love to address any questions that you have throughout the presentation. We'll be doing that at the end. The first item is the Federal R&D Credit Overview. We'll cover that a little bit. And then the Arizona R&D Credit Overview, which kind of goes hand in hand with the federal side of it. And then the Arizona Refundable R&D Credit, which is slightly different. And then how to successfully claim the credit. And we'll, as mentioned, we'll end up with a recap and question and answers. So please do get your questions out there. Peter, why don't you start us off with the Federal Credit Overview?
Sure. All right. So Tom mentioned the federal credit really goes hand in hand with the Arizona credit. The rules are essentially the same from a mechanical perspective. There are a few differences, but good place to start is with the federal credit, since Arizona really piggybacks off the federal rules. The federal R&D credit is the largest federal credit out there in terms of the actual dollars paid out. In 2005, and this is the most recent number we've got, there was over $6 billion in federal credit claims. So it could be much higher now, maybe as high as $10 billion.
And I think I have heard the $10 billion thrown out. I haven't seen the guidance there, but it's definitely very, very significant dollars for corporations.
Yep. And the purpose of the R&D credit can be summarized by this statement, which says the R&D credit helps keep the U.S. economy at the cutting edge of 21st century technologies by expanding high-tech jobs, encouraging innovation, and increasing future productivity and growth. So this credit is one that receives bipartisan support, and it's important to note that in both the recent House and Senate tax reform bills, it's still in there. It's one of the few credits that didn't get cut. And so this will make it even more valuable if that reform does pass and it is one of the sole surviving credits. So with that said, Tom is going to talk about the potential benefits of the credit.
Thanks, Peter. So as Peter mentioned, very, very significant both on the federal and the state. We're going to be primarily focusing on the Arizona credit as a state, but most states do have it, and we'll be talking a little bit more about that. But on the federal side, typically the math is not overly complex, but it's hard to give a specific number. But typically it's right around 5 to 10% of the qualified research expenditures qualify for this tax credit. And tax credits, for those who don't know, are a dollar for dollar reduction of income taxes. And so very, very positive for reducing taxes on a permanent basis. There's significant state taxes, Arizona, about 5 to 10% as well. So between the federal and Arizona credits combined, we're getting approximately 10 to 20% of the qualified expenses we're capturing as R&D. How much can you save? That's usually a question a lot of folks want to know, and it's not a very specific area. You'll see we threw some I guess theoretic type companies out there with revenues and total taxes, and you might note that the credits aren't lined up with revenues. So the credit is based on the qualified research expenditures that we're spending, and so it depends on which activities do qualify. But these are pretty typical type revenues and companies and entities, and basically every entity that is taxable has the potential for the R&D tax credit. And so as we're going through this stuff, you can think of many areas, and we've done everything from basically yard waste type companies to robotic engineering to food processors. So a lot of software development, things of that nature. So pretty much every industry can qualify for this, and the credits are very, very significant. And so in many cases, this is the most profitable project that a company does throughout the year as an individual project because it is a dollar for dollar reduction of taxes.
All right, so next up we're going to talk about whether or not your company qualifies and get into the actual rules and requirements to qualify for the credit. It's important to note that book R&D or GAAP R&D doesn't necessarily equal tax R&D for the credit. It can in certain cases, but oftentimes we find that tax R&D includes more than book or GAAP R&D. So there are 4 requirements that must be met for activities to qualify for the credit, and we'll run through each of these on the next slides in a bit more detail. But first one is that the activities need to be technological in nature. They need to be done for a qualified purpose. They need to be done to eliminate technical uncertainty, and they need to involve a process of experimentation. So going into a little more detail on each of those. Technological in nature, that requires that the activities need to rely on principles that are based in hard sciences, whether that's physics, biology, engineering, all types of engineering, electrical, mechanical, and computer science is considered a hard science, and that's a very common one for the R&D credit.
So Peter does have an engineering degree, but most of our clients, or a lot of our clients, there's people that are qualified that do not have degrees in these areas. This is purely one where you have to be utilizing these sciences, not that you have to have the credentials or the degrees in these sciences. And so in a lot of cases, we hear from our clients that are like, well, we don't qualify. We don't really have any engineers on staff, or we don't have any scientists on staff. But as Peter will continue to go, you'll see that even though you aren't degreed, you can still qualify.
Yep. So next up, the activities need to be done for the purpose of creating a new or improved product or process. So there's two parts to that to break down. We're looking at both new product development or improvements to existing products to the extent that you're trying to increase things like performance, reliability, and quality. But we're also looking at process development, and that is really manufacturing process development. So if you're trying to develop a process to successfully manufacture some type of new product, that very commonly can qualify for the credit as well. So third one is that there needs to be an element of technical uncertainty in that development process. And the uncertainty can relate to either uncertainty related to the capability, the appropriate method, or the appropriate design. You can know that you're ultimately going to be able to figure it out. So you know that you'll ultimately be successful, but the exact way that you go about doing that, if that is uncertain, then you'd meet that requirement there. And the fourth and final one is that there needs to be a process of experimentation in order to eliminate that technical uncertainty. So that really requires that you're evaluating different design alternatives, developing one or more hypotheses, designing and conducting tests, etc. So as long as those four activities are met, or those four requirements are met, then the associated activities would qualify, and you do need to meet all four of those, not just one of them.
A big area that we face when we're talking with clients is the reluctance to think that they are doing R&D. Their comments a lot of times are, "This is what we do for a living. Customers come to us with a problem, and we solve it." And if you're meeting these four-part tests, you do qualify, and so that tends to be a big hang-up. And so the other area relates to is in the past you had to do something that no one in your industry was doing. Now, if you are basically trying to catch up to a competitor and you meet these four-part tests, you can still qualify for the R&D credit. Yeah. So once you kind of know what activities qualify, the big area relates to what costs can we capture. And there's basically three areas of cost that we capture. They're wages, supplies, and subcontractors. And for wages, these are wages for people who are directly involved in research and development, people who are directly supporting or supervising it, and people who are directly doing the R&D. And so a lot of times the web spreads throughout an organization where you have people who are just the pure R&D people, the engineers, scientists, but then you have others maybe in procurement and other areas that are basically helping support the R&D process. And so in a lot of cases we're capturing a large portion of people's times, or a lot of people's times, and some of them are very small portions, but we are capturing lots of that. The IRS has what they call the 80% rule, and those are for those people who are very heavily involved in R&D. And basically, if they're doing 80% or more in R&D, the IRS and the states basically state that you are an R&D person and just capture 100%. One of the big areas that's a little confusing is the fact that you're not just capturing the wages, you're capturing Box 1 W-2 wages. And so those tend to be a little bit different from just people's gross wages, in that if they have 401k contributions, they have paying for any kind of insurance and other types of areas that affects Box 1 W-2 wages. And so it's not as simple as just grabbing it off of a GL code or just pulling people's gross wages. We have to kind of go back to Box 1 W-2 wages. The next area, supplies. These are supplies that are used in the conduct of doing the R&D. And so they do not include if you're buying computers or equipment and things of that nature. It is for those that are the components that are needed to prove out and do the R&D itself. And so in some industries, it's a huge and significant number. In other industries, such as software, it might be minimal or de minimis. And so each industry has different areas. But some of the industries that we deal with, such as construction and other very heavy supply type industries, the supplies are very, very significant. And the third area is for contract research. And so if we are basically hiring outside folks to do R&D activities, the IRS allows us to capture their time. We are able to capture them at 65%, and that's just a law that's out there. So it's just kind of defined in the code of what you can capture them at. But a lot of times these are really focused in on people who are helping with the design of the projects, testing of it, et cetera. When we're looking at contractors, we really are looking at the risks and rights. As Peter mentioned, the 4-part test, the other big area that we have to deal with is the entity that's doing this R&D has to retain risks and rights in the activities. And so if we're using subcontractors and they retain the risks and rights, as an example, if they're guaranteeing it's going to work and there isn't really a lot of integration risk, we may not be able to claim them. But overall, those are the three major areas that we're capturing: the supplies, wages, and subcontractors. And one of the big areas that really is critical is linking qualified activities to qualified expenses. And so that nexus between, here's the activity that we did and here's all the costs. In a lot of cases, a lot of companies don't track that. And so that's part of what we do. We go in there and we're trying to link some of these expenses to the qualified activities. Industries with potential, we did talk about this a little bit, but I mean, it is very broad, and we've seen pretty much R&D in virtually every type of entity out there, from wineries to robotics and engineering and injection molding, things of that nature. And so very, very significant area.
And with Arizona specifically, a lot of the clients we have are in that aerospace and defense sector is a big one, as well as technology software. Software is always big, really in any state.
Perfect.
All right. Looks like we have our first polling question. And it's a true or false. The R&D tax credit is limited to high-tech companies developing cutting-edge technology. And your options are true or false. I'll give everybody a few moments to respond. To participate, please click the button next to the answer you choose and hit submit.
From doing these presentations a number of times, hitting submit is one that some folks forget to do. So please do that. The questions that we design were not meant to be overly challenging, but we need to make sure that you're staying online to get your CPE. So we don't really care even if you're right or wrong, but please do push submit.
All right, let's see what everyone had to say.
So we had about 95% of the people said false and 5% true. Peter, what do you think about that?
The answer is definitely false. It doesn't have to be high-tech companies developing cutting-edge technology. As Tom mentioned, it's really just things that are new to your company, not new to the industry or to the world.
Perfect. So now that we talked about the federal side of it, we're going to go into the general Arizona R&D credit overview. So Arizona has a very, very lucrative credit. In fact, it's the most lucrative credit of any state. Theirs is 24%. As an example, the federal side is 20%. And so they follow primarily the same rules and regulations as the federal credit. And so when we're doing these types of states, we're really focusing on both the federal as well as the state credits. And then we are kind of figuring out some of the exceptions. And some of the exceptions for the Arizona credit is, as I mentioned, a higher credit, only focused on gross receipts from Arizona. And that becomes more, a little bit deeper, but basically, in some cases, we're figuring out the gross receipts for an entity multiplied by basically a base rate to come up with what minimum amounts of R&D you have to do to get a credit. And so having low gross receipts is a very positive thing in this case for the Arizona one. And the other big difference is the credit is not taxable income. So that's a nice add back too. So it's available for corporations, small businesses, individuals, and all types of pass-through entities. And so we see this, again, as mentioned many times, through all kinds of industries, all types of entity types. If you're taxable, you probably are going to qualify for the Arizona R&D credit if you meet the 4-part test and everything else. This next slide, we've mentioned it is very lucrative, but you can really see how Arizona stacks up to all the other states. And, in some cases, you got states that are giving, 5% or 10% credits. Arizona at 24% is the outlier. And then you see the federal credit right below there at 20%. So just a really good area. And so we are talking about, again, the federal credit as well as the Arizona credit. But if you have subsidiaries or are doing R&D in other states, we definitely should be capturing that as well to get state credits for you. And about 37 of the 50 states offer some kind of R&D tax credit.
All right. Our second polling question is, which tax jurisdiction offers the highest R&D tax credit? Arizona, California, federal, or Texas? And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 questions. Give everyone a few more seconds here. And let's take a look at the results.
All right. Well, 95% of the people said Arizona, and that is the right answer at 24%. It is the highest one, at least in the United States. Some other countries do have higher credits for doing R&D, and the R&D credit has been discussed on the federal level over many, many years about making it more lucrative. As Peter mentioned, it is a very expensive tax incentive, and so it hasn't really gone much further than that, but many, many other countries are, they do have a higher credit than the United States.
All right, so now we're going to talk about usability of the credit. And what this refers to is, it's one thing to have a credit on your return. It's another thing to be able to use that credit to reduce the amount of tax you owe. And so Arizona has a fairly usable credit. And for situations where the credit's not usable, it carries forward for 15 years, which is a long time. So you've got up to 15 years to be able to use that credit before you lose it. Now, one of the things that makes Arizona credits usable, more so usable than other states, is that Arizona does not have an alternative minimum tax. And alternative minimum tax, or AMT, really tends to be kind of the biggest killer of R&D credits, or the biggest limitation that we see, definitely on the federal side, also for states such as California, where the purpose of AMT is to limit the kind of excessive use of all these incentives, saying that you should pay some minimum amount of tax if your company is making money. So not having an AMT means that limitation is not there, which is great. So one of the other things about Arizona is that we've got this extremely high credit rate of 24%. So we're generating these large credits. But the corporate, or the personal and corporate income tax rates are relatively low from a state perspective. So having this large credit and relatively low tax rate can make the credit difficult to use in certain situations. So let's see. So we are going to go into the refundable credit. So this is where the refundable credit comes into play. In situations where a company has got more credits than they can use, Arizona does offer a refundable credit option. And just kind of a quick disclaimer, this is an extremely competitive process. And, if it is something you're thinking about doing, you definitely want to consult with a CPA firm that has a lot of experience in this. So it's available to companies with fewer than 150 full-time equivalent employees. And so full-time equivalent just means, 2 half-time employees, two employees working half-time or 20 hours a week would equal 1 full-time equivalent. And that is done at the end of the year. So as of December 31st, it's the number of employees that you have. This incentive is unique in that it is administered by the Arizona Commerce Authority opposed to the Arizona Department of Revenue. And we'll talk a little bit about how that works a few slides later. So one thing that you'll have to do if you are taking this payment or the credit in the form of refundable payment is that you got to give up 25% of your credit amount. So it's basically a fee that you're having to pay in order to get that in the form of a cash payment. And the most significant thing here is that total refundable credit are capped at $5 million per year. And that's not on a per taxpayer basis, that's total. So they're only shelling out $5 million each year, which really isn't a lot of money, in the grand scheme of things when you're talking about a state the size of Arizona. And this $5 million is allocated on a first come, first served basis. So this chart here just shows, what your options are if your credit exceeds your tax liability. So, the first thing you're going to want to ask is does your company have fewer than 150 full-time equivalent employees? If the answer is no, then your only option is to carry that credit forward, that excess credit forward for up to 15 years. If the answer is yes, you do have less than 150 employees, then you can elect to do that refundable credit, sacrifice 25% of it, and basically get 75% of that excess back in the form of a refundable credit.
So it is important. I mean, as you're understanding this, is if you really believe you're going to be utilizing the credit, you have 15 years to do it. So evaluating whether taking a haircut of 25% is worth it or getting the dollars today and utilizing it. As Peter mentioned, with the low corporate rates, and if your entity is the type of entity that's generating credits every year, it could be one where you're using the credit, but you're generating more credits than you're using. So it still makes sense to do the refundable.
Mm-hmm. So we've got a refundable credit example just to show the mechanics of how this works in situations where a company has some federal tax before credits, but is generating some Arizona tax before credits, but is generating a credit that is larger than their tax. So we've got a hypothetical software company based in Scottsdale, 55 full-time equivalent employees. They've got a federal tax before credits of $150,000. They've got an Arizona tax before credits of $40,000. They generated a federal R&D credit of $70,000 and an Arizona R&D credit of $80,000. And these numbers are actually kind of the Arizona credit you'll see is actually higher than the federal credit, which is very common due to that higher credit rate. So the way that this would work is, in terms of the federal side, the federal tax of $150,000 is going to be reduced down to $80,000 using that $70,000 federal R&D credit. And this is assuming that there's no AMT issues there. On the Arizona side, $40,000 of that Arizona tax is eliminated with the first $40,000 of the $80,000 Arizona credit. So you're eliminating your $40,000 tax, and then you've still got $40,000 in excess of that. And this is where the refundable credit comes in. So if you were to go through the process and make the selection and successfully get approved for this, you would essentially begin a check back of $30,000, which is that $40,000, 75% of that excess credit of $40,000. So this just kind of summarizes how that you'd ultimately be getting a $140,000 benefit in this case, which would, $70,000 of that would be in the form of federal tax savings, taxes that you didn't have to pay. You'd get $40,000 in Arizona tax savings, so taxes that you didn't have to pay, and then a refundable credit of $30,000 for taxes that you never owed and that never paid.
All right, our third polling question. Another true and false. Only companies with fewer than 150 full-time equivalent employees can take advantage of the Arizona R&D credit. Do you think that's true or false? And for those of you that would like a copy of today's slide deck, you can download them from the folder that says Slide Deck and Handouts, which is to the right of your slide view. We will also send the slides via email after the webcast. And let's take a look at the results.
All right. So yes, the answer is false. That 150 limit is only for the refundable aspect of the credit. So there's no limit for just a regular non-refundable credit. You can have as many employees as you have. So actually, just got a question in that I'll probably answer right now because it's relevant to what we just talked about. The question is it 150 employees in Arizona or 150 employees company-wide? Which is a really good question. It is 150 employees company-wide. So. All right, so next up, we're going to talk about the refundable credit filing process. And as I mentioned, this credit is administered by the Arizona Commerce Authority. And that's an agency that basically deals with all of Arizona's tax credits and incentives. So the process is that you first, if you think this is something that you want to do, and you get a CPA that's going to help you do this, and you go in and you create an account with the Arizona Commerce Authority. And in that, you're going to list your CPA that you're working with as your designated representative, and that'll allow the CPA to really take it from there and to do the filings that are needed. You do have to complete an R&D study in December. And actually, I should kind of back up and mention that this application process opens the first business day following New Year's Day. So whether that's January 2nd or January 3rd, that's when the actual application process opens. So you have to have everything done by then. So back to step 2, you got to have an R&D study completed in December or prior to December for the 2017 tax year. Then once you have that completed and it comes time to file that application on January 2nd or January 3rd, this is done through that website, and it requires you to estimate your tax liability for the year without R&D credit, and provide a completed R&D credit calculation. And there's a lot of other documents that you have to upload with that. The reason you got to show your R&D credit and your estimated tax liability is because that difference between the two is going to be what you're requesting for a refund. Then the next step, which is the step that I dislike the most, is waiting for approval from the ACA. And this can take a while. It can take a few months, a month and a half, I think, last year. If you're lucky enough to get approval, then what they give you is what's called a certificate of qualification, which basically says when it comes time to file your tax return, you've been approved for up to this amount in refundable credits. So you wait until it's time to file your tax return, and when you do file your tax return, you include that certificate, and assuming nothing's changed in your tax position, if the company's still in losses, then once you get your tax refund, you'll have the refundable credit will be included in there. But it's important to note that there is no need to file any early tax return. This is all just a pre-approval process that comes well in advance of filing your tax return.
All right. So successfully claiming the credit. So it's one thing to basically know that you're doing some R&D, but the question is what are you doing to successfully claim it? And so as we go forward. So the refundable credit timing is very, very critical. And I don't know, probably 5 years ago, you had a period of time, maybe a few days to a week or two to actually to claim this credit. Since 2014, basically the full amount has been depleted within the first day. And so, as Peter mentioned, the idea that you need to really do the work in November, December, so that way you're able to basically have it all filed on the first day that you can. If you are not able to do that, you will not be getting a refundable portion of the credit. If you don't qualify for the refundable portion, you're basically going to just carry forward those credits. And so the credits still are out there. It's just now you're going to need to have taxable Arizona income and income tax to offset those credits. And so if you're looking forward to the refundable portion, and you better have all your ducks in a row to get it all finalized and sent out.
And again, this is something that we definitely don't recommend companies doing internally if they haven't done it before. And even, we recommend that if you are going to do this, find a CPA that has experience doing just this, and it's not their first time filing this process, because it's just way too competitive.
And so the two most common reasons for delays include missing supporting documentation, incomplete or incorrect Arizona Form 308. So you really don't want to drop the ball here, because this is real dollars in the entity's pocket. And so the real key is to do it quickly, to do it right, and to have everything all lined up to do it. In the past, Moss Adams has achieved about a third of all these credits available. And, the idea is we really do attack these things. We know it. We have a lot of dialogue with the ACA to figure out what they're looking for before the filing. So that way we're not accidentally missing something.
All right, our final polling question. When is the best time to consider whether your company may be eligible to apply for the refundable Arizona R&D credit? Your options are just before April 15th, ASAP, just before May 15th, or sometime in March. And again, I'll give everybody a few moments to make your selection. Once you have completed all CPE requirements, you will be able to download a PDF of your CPE certificate from the certification icon to the right of the slide view. And let's see what everyone has to say.
All right. Well, we had 94.7% that said ASAP, and that is correct. If you want the Arizona refundable credit, it has to be, there's no definitives, but all the dollars have been gone by the first day of the filing potential, which is, as Peter mentioned, depending upon the calendar, usually January 2nd or January 3rd. And so you really do need to have everything figured out beforehand, because if you wait till April 15th or May 15th or any other time, you will not be most likely getting the refundable portion. You will be getting an R&D credit that can be carried forward for 15 years.
And part of the reason why we do the time, if we have this presentation when we're having it right now, is that this is kind of last call for being able to do this and getting these engagements started. We do have to have this done in December, which means, this is really the latest that we'd want to get started on these.
All right. Successfully claiming the credit, identifying all your qualifying expenditures is really key. First off, obviously, figuring out your qualified activities, and then getting the nexus between the qualified activities and the qualified expenditures is really important. You want to really understand the contracts, if you have contracts with contractors or customers, what they say relating to risks and rights, and really honing in on those areas that, that could be challenged by the taxing authorities. And so as we're going through and doing these studies, we're really looking at the contracts, we're looking at the activities, we're looking at who's involved, and trying to pair the qualified activities with the qualified expenses. And then obviously we're trying to figure out how to streamline it for the future as well. So that's really, really the key of doing this. And as Peter kind of mentioned, we all mentioned, is if you want the refundable one, you better be attacking it like this month and next month, because if you wait till the first of next year, you're not going to get the refundable one. You will still be eligible for the Arizona and the federal credits, which carry forward. So recap, Arizona credit is the largest credit available. Companies across industries can qualify. Non-refundable Arizona credit, no employee restrictions. And so, the only restriction we have is the 150 if you want the refundable credit. And so as we're going through looking at these entities, it's really understanding how many employees we have. And we've had clients that we've been doing for a number of years who now are over the 150 employee mark, who are no longer eligible for the refundable credit. They are still eligible for the Arizona credit and the federal credit and any other states that they're doing R&D in. Another big area, that relates to Arizona, but also all states, is the R&D has to be occurring within the state of Arizona for the Arizona credit. It has to be occurring in the United States for the federal credit, and then virtually every other state has that same rule. And so these credits are generated based on the qualified research expenditures that are generated in the various jurisdictions, whether it's federal or state. And so as we're going through it, in some cases we're doing 10 or 15 different states, and each one has different types of rules and regulations. But for the most part, they really do track the federal one at the beginning with some differences. Consult with somebody who knows what they're doing with experience, the CPAs. As mentioned, you don't want to have a form that's not filled out properly or the documentation is not there to support it. If that's the case, you most likely will not be getting the refundable credit because you don't have time to kind of figure it out. It has to be done and done correctly on day one. So now is the best time to start thinking about it, start getting ready to apply for it.
So there are Arizona is, as this presentation is titled, a very generous state in terms of tax incentives. There are a lot of other incentives out there specific to Arizona. Some of them are refundable. More of them are non-refundable. But as we do these R&D credit studies for Arizona, we're always assessing, which other incentives might apply. And some of those incentives that are pretty common are the what's called the qualified facilities tax credit, which is for building new facilities in Arizona. The quality jobs tax credit, job training tax credit, and then an easy one is the sales tax exemption for manufacturers. But there's a lot more. That's just a few common examples. So something we always take a look at though when we're doing these R&D studies.
So we keep getting questions, and we're going to be asking for questions. So if you have a question, please type it in now so we can definitely ask those or answer those in a few minutes.
So we got one question that came in that is a good question. It relates to that carry forward versus refundable aspect. The question reads: if a taxpayer with less than 150 employees decides to carry over the credit for up to 15 years, and after 14 years realizes that it wouldn't be able to fully use the credit, then they reclaim their reduced refundable credit. The answer is no for that, and the reason is that that $5 million cap applies to the year that the credit is generated. So for 2017 credits, they're only shelling out $5 million, which is, goes right away. So, 14 years later, if you're trying to use a credit generated in 2017, that refundable option is going to be long gone. 14 years later, if you're generating a credit in that year, you could try to apply that, go for the refundable credit then, but no, you can't use carry forwards. Answer that question.
All right. You want to knock off a few more questions?
Sure.
All right, what do we got here? Why don't you read them off?
Okay. So one is regarding the $5 million refundable portion of the credit. Is that just for the federal credit, the Arizona credit, or both?
So the $5 million refundable portion is just the Arizona credit. Federal does not have a refundable portion of it. So The $5 million is coming from the ACA that is tied to the R&D credits that are generated in Arizona. So federal credits carry forward for 20 years. Arizona credits carry forward for 15 years. And obviously the refundable one is available for entities that have less than 150 employees as of year end. And also if they're willing to take a 25% haircut.
Yeah, and just to make it really clear, so the $5 million cap only applies to the refundable option. There is no cap on just a regular non-refundable. And I'm sure that Arizona pays out a lot more in non-refundable, much more than $5 million in non-refundable credit claims each year.
Great. Well, yeah, for some reason I'm not pulling them up.
Okay, yeah. So another one is, with regards to activities that qualify for the credit under the 4-part test, could that include website improvements involving performance, reliability, and quality? So that is a good question. I can take the first stab at that, and then Tom, you can chime in. So there's been some recent changes in law that have basically opened up the door to make it easier to claim expenses that are related to what's called internal use software. This is an area, so back when this R&D credit was created, back in the early 80s, software was a much different thing than it is today. And they put some really some restrictions in there for claiming the credit for internal use software, which they identified as back office accounting systems, HR systems, basically systems that didn't interact with third parties. So they essentially did two things. They made it easier. They lowered the restrictions and made it easier to qualify internal use software, and they redefined what internal use software is. So if this website is a website that interacts with third parties, whether it be your customers, if it has some kind of e-commerce aspect of it, where they're actually going in there to initiate purchases or various other actions, then that aspect of the website would likely not be considered internal use software, and those we depending on the exact situation, it is very possible that improvements related to performance, reliability, and quality could qualify in that situation.
Great.
Sorry, that was a pretty long-winded answer, but
no worries.
Good question.
What's our next question?
How long does it take does a typical study take to complete?
Wow. Well, they tend to take about 4 weeks from start to finish, but there's certain areas that we can do in, say, November, December, and then finalize the numbers right at the end of the year, and then do some backfilling for support. So, but typically that 4 to 6 week period is kind of where it's at. What we've seen is we've been able to get some that a little bit slightly under that amount, but it's just more challenging.
Another question here is, if you're eligible for the federal R&D tax credit, do you automatically qualify for the Arizona credit as well, or vice versa, which is a big question.
That's a great question. There's a couple things. So the Arizona credit is only for qualified research expenditures within the Arizona. So there is, in some cases, you have an Arizona company that has an R&D, all their R&D is occurring outside the state, and therefore they would have a federal credit but would not have an Arizona credit. But typically, if you're qualifying for the federal credit and the activities are occurring in Arizona, you're probably going to be qualifying for the Arizona credit as well. And in some cases, it's easier based on, as mentioned by Peter and others, the revenues and other things. The credits, potentially would not be phased out because it's a little bit more beneficial in the Arizona area.
And as I mentioned earlier, whenever we're doing an Arizona credit, we're going to include a federal credit generally, just because the work is really the same to be able to calculate both. Even if a company can't necessarily use the federal credit right away, it's really not much more work on our part to calculate both of them. And same thing would go for if your company is, if you're if you're interested in a federal credit and you happen to operate in Arizona, we're going to do them both.
Great.
All right.
What else is out there?
Got another question regarding the 150 full-time equivalent employee cap, and this is definitely something that we've seen really disqualify a lot of companies, and it's something that the ACA is very strict on, and it's going to get audited. They're going to look at your head count as of year end, and if you're one over, it's a deal breaker. But the question here is that 150 full-time equivalent employee cap, is that based on the head count at year end, at the beginning of the year, or an average during the year? And it's based on the head count as of December 31st, at end of the year.
Great. How much time and involvement is required of our staff? That's also one that gets asked quite a bit. And it's after we've done these studies a number of times, typically the answer is, wow, this was less intrusive than they thought. But with that being said, we do need to basically talk to those who are doing the R&D, document this stuff. But it's not significant time. Peter, you want to?
Yeah, it does vary a bit from company to company. And if the company happens to have one really good contact that is familiar with all the development activities, such as a director of engineering, we can oftentimes get a lot of the initial information from that individual for the sake of doing the refundable credit filing process. And then what we also do is we try to backfill some of the more detailed support until after we've received that approval and we know that we're going to get the refundable credit. And in that situation, then we'll want to talk to more individuals, do more specific documentation on the projects, and really put together a support package.
Great.
We got another good question here. It says you mentioned doing a study in December to apply for AZ refundable credit. How do you do this when W-2s are not completed? Great question. And what we have to do here is we have to use year-to-date W-2 equivalents up to a certain date. Generally we'll shoot for, it depends on when we engage the client and when we're able to get started. If it's 10/31 as of 10/31 or as of that's really the 10/31 or 11/30. And then we gross it up.
Yeah, in some cases we can get the equivalents. I mean, we've been doing this for many years. We know what goes in Box 1 W-2, so the payroll providers a lot of times can electronically provide us this information, whether it's even as of December 15th or whatever the latest payroll time is, and then we can basically understand and add the next portion for the next payroll cutoff. But for the most part, when you're dealing with this stuff, we're able to get a good estimate of what Box 1 W-2 wages are going to be. And the same thing with, obviously, supplies and subcontractors and everything else. And the real key, as probably mentioned too many times, is if you don't get it done on the second or third, you're probably not going to have a refundable credit. So we're able to really get in there and hone it in, and then as Peter also mentioned, is after the fact we can then tighten it up at the back end. And if there is some significant changes, we would have to adjust that on our filing.
I think that might. Okay, one more is there anything I can do throughout the year to make next year's study go smoothly? Well, if you're talking about next year in terms of 2018, then yes. A big part of that is collecting documentation. A big part of these credits, under audit, being able to support them is having what they call contemporaneous documentation, which is documentation that your employees are producing throughout the year, throughout the development, that indicates what the development is and highlights any kind of challenges with the development. So making sure that you're retaining that throughout the year. It's harder to go in and collect that retroactively and to identify what documentation's out there, but really kind of informing your employees of what kind of documentation is useful, what they should be flagging, what they should be saving ahead of time really makes that easier to collect.
Yep. You got one. Can I calculate the credit myself? Why or why not? I think the short answer is yeah, you potentially could. The longer answer is this stuff is pretty complex, pretty gray in the tax law, and there are a lot of ins and outs of how to calculate an R&D credit for both the federal as well as the Arizona credits. And secondly is the documentation needs to be done correctly right from the first filing especially if you're going for the Arizona refundable credit. And what we've just found is when people try to do it themselves, it doesn't work, or they are shortchanging themselves significantly. But the long answer or the short answer is yeah, you can calculate this like you can calculate, you can do your own taxes, etc. But what we found is it's pretty potentially you're going to lose the credit, the refundable portion, or shortchange yourself.
Got another question. How will potential Trump tax reform impact all this, if at all? Great question. And I kind of mentioned that in both the House and the Senate proposed bills, the R&D credit is one of the few credits out there that remained untouched. And the reason for that is that it has historically received bipartisan support. There's nobody that's really against the R&D credit in government. And so, but with that said, the simple fact that a lot of other credits are going away, and this is really going to be the last significant business credit. Well, there's still some other ones, but it's just going to make this credit more valuable since a lot of other ones are going away.
And then just to add on to that is it would not impact the state credits. Mm-hmm. So whether it's Arizona or other states out there, typically their rules are a bit different. One of the if for some reason the whole federal side went away, one of the big areas that the states rely on are court cases that are done at the federal level, and to kind of define what is R&D, what isn't. And we may not get additional court cases, but we have a lot of tax law, regs, rules, etc. For many, many decades that kind of define this. And so, but for the most part, it would not impact the Arizona refundable or the Arizona R&D tax credit.
And I think that's all we got in terms of questions here.
Emily, do you want to close it down for us?
Yep. Thank you both, Tom and Peter, for a great presentation today, and thanks for tackling all of those great attendee questions that we had. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts icon to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window to the right of your slide view. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 2 weeks should you have any difficulty downloading it now. And here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Thank you for joining us, and we hope you'll join us again next time.
Thanks so much.
Thank you.